So in tonight's free video, we're going to cover some of the day trades that set up today. And the idea behind this is to show you the methodology, the process behind these. I'm going to start off with the Dow and why a lot of times, again, I don't want anyone associating day trading with activity. And I think oftentimes that is the way most people look at day trading, that it's a lot of getting in and getting out and a lot of round trips and a lot of activity. And I really believe that couldn't be, frankly, further from the truth. Let's take the Dow for a very good example here. One of our later parts of the day setups is something we call a initial balance breach to VWAP fade. Initial balance breach to VWAP fade. And this is basically where it happened. Right in the breach that happened, and I'm going to outline this right here. Right in the breach it happened right there. This is the market taking out the 60-minute lows. We sold off and broke through the high-low of the first 60 minutes of the day. And that's what's known as the initial balance. So we call that the initial balance breach. And that's not necessarily the trade. So a lot of folks will take a breach as a momentum entry. But instead, what we do is a breach retreat. We let the market retreat after pulling back from, or after breaking through. We let it pull back or bounce, however you want to look at it. After that, kind of, in my mind, it's sort of like tipping the hand, telling the market, hey, there's a bearish psychology that just basically plugged in. It's on now. It's powered on. And so we wait for the retreat into the zone of the resistance, specifically in this case, of our VWAP. So ideally, it's going to be something that's a little higher. It might be the 7 a.m. VWAP or the 9:30 a.m. In this case, it even overlapped with the retracement of the clearing range, of the initial balance range, high-low. There's a lot to like about this resistance level. So that's what we had here, a bounce into that area. And that's an initial balance to VWAP short. And it may not seem like much, and it may not seem like something that should necessarily suggest the sell-off that came into the close. But remember, we're not expecting that. We're not anticipating that. We're just looking for the market to get back down to basically the clearing range low, or even the low that it plotted when the market breached down in this level. That's the first target. After that, we can basically put in a break-even stop and then ask ourselves, okay, how low is low? Now, the next level that was tempting, and I think this would be a really good spot to think of support, was indeed our hourly price movement range support right in there. As soon as this high got plotted, this low became a viable zone of historical volatility, say that 3 times, historical volatility-based support. And so this is a very simple calculation that comes from the auto chartist data. They compile this information. We then turned it into a simple arithmetic-based indicator. So I basically figured out, wow, if you take the high of that hour, subtract the hourly price movement range that we get from auto chartist, then you're going to get sort of this really projected support level for that hour based on volatility. It's a very cool process, and that's what we have plotted here. So that would be a great second target. All right, so once again, you can move to a break even, and then that's where everything, obviously got cooking, okay? Now, this just reminds me to say you never know how far a market's going to go. And once you've taken a profit and moved to a break even, this is where I kind of say, hey, kick your feet up and let's see how far it can go. Then I'm going to juxtapose this just a little bit with the NASDAQ. And we'll dive into more detail in the premium video on this. This is another HPMR. In this case, it was a buy, right? And so the idea here is to not, again, overdo it on the first profit target. If there's anything a lot of traders do is they get way too ambitious on their first target and not ambitious enough on the second. Now the NASDAQ fell as the as the Dow did as well. But again, if you didn't think about break-even stops and paying yourself, this would have actually ended pretty poorly. We'll get into how to manage these trades in the premium video, but keep that in mind. Think about initial balance to VWAP type moves. Think about the way in which you segment out your day. And that segmenting is a really big deal. You know, how we segment our day, how I look at pre and post the bell, right? How do we look at the market before 9:30? How do we look at the market after 4? Because one thing that we've been talking a lot about is that low volume pump that we've been seeing through the Asian session, European Open, UK Open, into the Asian close, and even into the Wall Street bell, where things tend to get pretty choppy before they find a direction later in the day. Some of the best trading right now is for 24-hour traders, and that is Forex and futures traders. And, you know, I know that's why you're watching these videos. So think about that. How can you take advantage of that 24-hour market? I'll see you in the next update.